What's going on, guys? Welcome back to another YouTube video. And I thought I would make a trending video that's going around right now. Obviously, everyone knows about the coronavirus. It's spreading. So I wanted to make a video. If anyone's concerned, how is that going to affect the housing market? That's coming up right after this. What's going on, guys? Welcome back to the YouTube channel that's all about real estate. My name is Alex and I post 3 videos a week every Monday, Wednesday, Friday. So if you're not already subscribed to this channel, think about subscribing, and if you get any value out of this video, hit that like button as well. You seem to hear a new article on the news, the coronavirus, right? It's spreading and the stock market's plunging. Is the economy going to go into recession? There's a lot of fears. There's a lot of unknowns from a lot of people. From people, my clients, should they buy now? Should they wait? And hopefully this whole video is gonna clear that up and, give you guys some insight to where the housing market is right now and where I think it's gonna go in my own opinion. So first off, the number one indicator to a housing market, the formula for a good housing market is job growth, unemployment, and mortgage interest rates. First off, Seattle has become the hub for tech companies around the nation. This is why Seattle's housing market is so strong right now. In likes of the Amazon, Microsoft, Boeing, we have all these huge companies that are present in Seattle or around Seattle, in Bellevue, and all these people are migrating into this area, into the Puget Sound area, and the wages that these companies are paying out are great, right? So this is only helping out our housing market and keeping our housing market really, really strong. The amount of supply out on the market, or months of inventory is what we call it, is near record lows. What this means is, say if I said there was 1 month of inventory on the market, this would mean if all transactions stopped, if everyone just stayed in their house, nobody was buying or selling, there would be 1 month of inventory left on the market. Right now, where I do business 30 minutes north of Seattle, we're at 0.5 months of inventory. We haven't seen these levels since about 2 or 3 years ago, when the market was extremely hot and we had multiple offers on every single property. We are back to that housing market, especially going into the spring. Now, coupled with that, demand is near record high. There's so many people flooding into the Puget Sound that need housing. That's why you see all these new construction homes being built. All these people, with great wages, like I'm saying, so they can afford these houses, which is super important. And what this couples with is when you have extremely low supply, extremely high demand, this is the recipe for very high appreciation. And this is why we've seen over the past couple years, prices have almost reached their ceiling and people are having a hard time affording houses. This is why we see a lot of people moving out of Seattle. They're moving way up north, or they're moving way down south to more affordable prices like in Federal Way, Olympia, Tacoma, etc. Now, the coronavirus has actually helped the housing market, in my opinion, and it's helped buyers out in their borrowing power by lowering mortgage interest rates to all-time lows. Why is this? Well, for all of you guys that are invested in the stock market or even pay somewhat of attention to the stock market has been plunging every single day, The Dow Jones has been going down because of the coronavirus, because consumers are feared that the earnings report of these companies are gonna come out really low, meaning their valuations are gonna go down and the stock is gonna go down. So a lot of people are getting out of the stock market because it's super volatile right now. So what happens when consumers get out of the stock market? When they get out of equities, well, they put their money in bonds, right? This is gonna be a safer investment, and they kind of write it out inside of the bond market. This is actually a good thing if we're talking in terms of mortgage interest rates, because the bond market directly correlates with interest rates on mortgages. And how this works is when more people buy bonds, the bond price will go up. Now, on the direct opposite end of that, what's called the yield will go down. Now, this is what directly correlates with mortgage interest rates. So the yield is extremely low right now, making mortgage interest rates extremely low as well. This is why mortgage interest rates have dropped tremendously, and it's because of the coronavirus. And they've dropped to all-time lows. So if you're a buyer out there sitting on the sidelines, waiting to buy, if you think we're gonna go into recession, first off, the housing market is in a very, very strong position. If we look at all the indicators, our job growth, mortgage interest rates now at all-time lows, right? Our unemployment is extremely low. The in-migration into the Puget Sound, the amount of people looking for houses. If you're looking at all these factors, the housing market's in a really strong position. Even though, the coronavirus is breaking out, it's gonna have no effect on our housing market in this area. So if you're a buyer out there, I would take advantage of these super low mortgage interest rates, get a 30-year fixed mortgage at the lowest rate ever, and you can lock in a great house, and you're gonna be able to buy a nicer house right now with these lower interest rates. For those people that are really concerned, they're like, what happens if it goes back to the 2008 housing crisis? Well, first off, let me explain to you guys why that took place in 2008 if you don't know why. First off, the mortgages that they were getting were based off income stated mortgages. We call these liar loans. Essentially, you'd go to your mortgage broker and you would say, I make $85,000 a year. I make $200,000 a year. And they would approve you off of this, okay? And then what they were getting was these adjustable rate mortgages that when the end of the arm would, expire and the new arm would kick in, it would have a way higher interest rate and they couldn't afford the monthly payment. And this was just kind of a domino effect of more people foreclosing on their properties, and then it eventually collapsed. Fast forward, we have no more income stated mortgages. There's all this documentation that you have to provide before you get a mortgage, right? So this is a lot more solidified. So now we actually have a true housing market, right? It's not artificial appreciation. We're back to the same principles that apply to every single business, supply and demand. And right now when supply is extremely low, demand is extremely high, we're gonna see prices push up in appreciation, which we're seeing right now. There you guys have it. Hopefully that cleared up some confusion if you're feeling on the edge of either buying or either selling, or where is the housing market gonna go. It's in a really, really good position, and the number one indicator, like I said, is job growth, okay, unemployment, okay, now mortgage interest rates are at their all-time lows, which for sellers is good, and for buyers is even better because that's the borrowing power of buyers if you're financing the deal. Guys, there you guys have it. If you need any help with your real estate needs in Washington State, or even around the nation, I have a full list of top producing brokers that can help you out. And just contact me in the description. All my contact information is in there. And we'll see you guys on the next video. Peace.